Into the auditing section, because if you look at up to now we have given a fair coverage about other syllabus topics. So, before getting into some questions from auditing, so I know now I mean it is not the time to cover entire auditing, which is a huge section of your syllabus, but to make sure that you understand the fundamentals, I want to refresh your knowledge, and then definitely this will be useful in our discussion of balance question of this paper, as well as I am going to probably do you another session which is your mock exam. So, for both this will be very useful. Now, if you look at the process of auditing, right, if I were to visualize, if I conceptualize the process of auditing, let us say this is the end result of auditing. So, what is the end result? So, the objective, there is a separate auditing standard, but to simplify, the end result of auditing is to give an opinion, right. So, let us say opinion, but what is this opinion? It is about MM. So, who is MM? Financial statements are free of material misstatement. So, there is a big question of what is a misstatement. The entire process of auditing revolves around two things. One is to identify whether there are misstatement. Of course, you should know what is meant by a misstatement, I will come to that as well. Identify whether there is a misstatement and then address it, right. So, identify, so we always use the word risk, right. Identify risk of material misstatement, let us put R here, free of risk of material misstatement. Once you identify, for example, there is a risk in a manufacturing company to have slow moving inventory. So, there is a chance that inventory is wrong, inventory is overstated. So, as the auditor will discover this through audit procedures. So, these are called response. If somebody asks, summarize audit in 2 words, you can probably say risk and then the response. There are a lot of other things, we will get into details. So, one is to give an opinion. If auditor wants to give an opinion, where do you start? So, let us go to the basis, right, fundamentals. Remember, you will never give a proper opinion if you are biased. So, the first thing is ethics, right. So, you have to ensure as an auditor, if you are an auditor, you follow fundamental ethical principles, especially independence. Now, once you follow that, it is also important to ensure that audit firm is having right quality controls, the right people, all that. So, I do not touch that part now. The balance is, if you can't do audit without complying with auditing standards. You have to comply with Sri Lanka auditing standards. So, there are 30 odd auditing standards. For example, there is a standard on planning audit, setting a materiality, audit evidence, external confirmation, audit reporting and so on. So, every auditing standard auditor should follow, comply with all standards. So, we can say all relevant standards. Actually, the diagram, what I am going to show diagrammically is one auditing standard, which is, I am sure you would have come across this. This is called Sri Lanka Auditing Standard 200. The objective of an audit, objective of an independent audit of financial statements and conduct of an audit in accordance with auditing standard. This standard may be about 30-40 pages. I am presenting to you in one holistic picture, right. So, we have to follow all the standards. So, when you follow standards, what are you going to do by following standards? I just mentioned to you there is one standard to know in a set of accounts what are the risks. It helps auditor to identify risks. Another standard to gather audit evidence, another standard of how to send confirmation, another standard on reporting and so on. So, all these standards helps auditor to remember if you want to give an opinion. Now, put it in very simple language. Somebody is asking, one of your friend from another friend asking, for whatever reason, what do you think about this person? What is your opinion? Is he good? If you want to give an opinion, you have to give it based on facts. You can't just give an opinion, right. So, those facts that matters to auditor in giving the opinion are right in big letters, right. What are they? when you follow all the auditing standard, automatically you are compelled to gather what? Audit evidence. So, this is fundamental. There is no auditing without audit evidence. And always remember, we use these two words with audit evidence, right. Whenever audit evidence comes, we use, it has to be sufficient, it has to be appropriate audit evidence, sufficient, appropriate audit evidence. Again, sufficient means the quantity of audit evidence, enough evidence. Appropriate audit evidence means relevant, right, and reliable evidence, right. So, then what is reliable? Now, see, this is studying. You can just have a piece of paper with you, you can ask all this question by yourself. Ask what is reliable evidence, right. For example, evidence gathered in writing is more reliable than oral evidence. External evidence are more reliable than internal evidence. So, like that you have to study. I challenge you that you do not know this, what is relevant. Obviously, you may say something, but remember, technically audit evidence has to be relevant. I mentioned to you previously, most auditing students struggle in this concept. Audit evidence must be relevant to assertion. Without assertion, there is no auditing. So, I will cover that. I will quickly explain to you what this means, right, assertion. So, anyway, what I am trying to say is that when you follow auditing standard, you gather evidence, right. Now, the question is, what is the process of gathering audit evidence, right. So, usually I already covered you in auditing. If somebody asks what are the procedures for gathering evidence, there are two answers. One is called risk assessment procedures, right. Risk assessment, I do not write the full word here because we are trying to do this very quickly because we are covering a lot of things in a limited time. Risk assessment procedures. Now, if you are an auditor, if I will ask you how to audit. You want to audit a bank, there is a junior bunch of auditors going to the bank and asking the accounts, and they start auditing. Auditing what? Millions of transactions, do not know what to audit. So, before you audit, you need to look at what are the areas which are more susceptible, right. The areas which has a higher chance of manipulation. For that you have to understand. So, the key word here is understand. The procedure auditor is using to understand the business is called risk assessment procedure. For example, when you talk to the management, how you are investing your funds, right, they are saying we are investing in stock market and foreign investments, and now when you go to details, you see there are high risk investments, right. So, those investments may be overstated if they haven't impaired, right. So, like that, more you understand the business, you know what to audit. So, in short, the first part is what to audit, that is called risk assessment procedures, right. Let us say after doing risk assessment procedure in one company, you decide that inventory is high risk, right, say stock, this is a manufacturing company, right, and they are selling say electronic items. Now, with the recession of the country, now inventory is not moving, inventory is one area to audit. And with the same recession condition, right, they are unable to collect money from the debtor. So, debtor is a risk. Now, you do various procedures to identify risk. So, those are called risk assessment procedure. If you ask me what are those procedures, of course, you can ask from the company, you know what are your risks. They may tell or may not tell, but one of the very powerful techniques of risk assessment is to analyze accounts, analytical procedures, right. So, it helps you to see, okay, debtors, stocks, if you look at the numbers, they are not moving, there are some categories of stocks which are not moving. So, analytical procedures helps to identify risk, right. It can be inquiry, analytics, you can go through documents and so on, inspection of documents, right, board minutes, things like that. So, these are risk assessment procedures, balance procedures. Now, after risk assessment, let us say to simplify, you have identified stock and debtors. But I am telling you one very important thing, you can't just say stock, because I told you end of the day what we audit is assertion. So, what is assertion? A tough question, right. In very short, assertion, if you look at the dictionary, look up the dictionary for assertion, you will see assertion means declare something to be true, right. which means somebody declares something to be true, it may be true or may not be true, right. I can assert my friend is good, but we do not know whether he is good, somebody will question, right. So, when management gives the sales number in one company to shareholder, our sales is 100 million, it is an assertion, we do not know whether this sale is right. One has to question whether this sale has actually happened, that is called occurrence assertion. Right, one has to confirm this sale has made to so and that customer is there and that balance, debtor balance is actually in existence. You can go and collect the money, you have the legal right to collect the money, that is called right. So, these type of assertions are there. So, in other words, assertion means what management represent and auditor use the same assertion to audit, because audit risk always revolves around assertion. And I actually, if I expand risk of material misstatement, there are two risks. One risk is called inherent risk. You look at your book now, after this session you can go to your study text and read what is inherent and control risk. If you look at the definition of inherent risk means if you forget internal control, what is the chance that an assertion can be misstated. Now, in the company that I mentioned to you now, during today's crisis time, there is one manufacturing company, all operation have stopped, the electronic items are not moving, the inventory is not moving. So, what is the assertion? Inventory valuation. There is assertion called valuation. Valuation means, now see, now when you audit, I ask you a question, what is a misstatement? I am sure some of you can't answer. Misstatement means something is wrong. For you to say something is wrong, based on what it is wrong based on how it should be prepared. How inventory should be valued? The answer is accounting standard. There is accounting standard to value inventory that says you value inventory using lower of cost or NRV, right. Your cost of producing this inventory is, let us say 100 rupees. Now, this item is not, sorry, I said the electronic items, let us put here, this is say 400,000 rupees, right. Some item which is now not moving and it has been there in the store for longer period. Now, they see we can't sell this, we can only sell this at 200,000, right. So, there is a huge drop. Now, which means now inventory is overstated, right. So, the assertion which is misstated is valuation, right. So, inherent risk is that. So, control risk is that ideally company should have an inventory report, go through and identify these items and then provide for inventories, right, reduce the value of inventory. If company has not done that properly, there is a control risk, right. So, if inherent risk is high, if control risk also high, overall risk is very high, you have to do lot of work to detect the inventory overstatement. That detective procedures in auditing is called further audit procedures. So, let me to put that very clearly. Now, the second part of auditing is further audit procedures. So, risk assessment procedures and further audit procedures. So, these terms are very important and I recommend you to write down, right. If somebody asks what are the procedures in auditing to gather evidence, you will probably say there is risk assessment procedures and further audit procedures. What is the difference? Risk assessment is to know where the risk is, further audit procedure is to detect the risk and say the accounts are overstated by how much, because then you can decide what is your opinion. So, again, further audit procedure, what is the logical approach, right. The first thing is, do not audit, you check how company audits, right. What I am sure you did not understand that. Now, before gathering audit evidence to check whether there is a misstatement, the first thing auditor will look at, because remember the purpose here is to know whether financial statements are free of materially misstated. Now, in this case inventory is overstated. So, how do we know whether it is materially misstated or not? First of all, is the company able to identify a material misstatement? Now, in my inventory example, if company is looking inventory reports and identifying it, I am happy. So, the first party to detect a misstatement is control of the company. right? Company should have a control. As the auditor, if I am happy, I am going to test that control. The first procedure in auditing, logically audit always prefer, before I detect the misstatement, I want to know how company is going to detect. Company's accountant is reviewing the inventory report and detecting. So I am happy as the auditor, why should I waste my time? Because company's auditor has identified that. That's called test of control. So I remember I mentioned to you in my previous explanation, log story, control has to be designed, there should be a proper report, accountant should be looking at the report every month. So then we call control is designed, implemented and operating effectively. So I am happy now because company is detecting misstatement. Can I not do any audit testing saying company is detecting? No, because there are limitations of internal controls. There are many limitations. Please go through your study pack. These are again examinable topics, right? So therefore, auditing standard requires you to do some level of substantive procedures. So please write down very important word, and I can challenge you that you cannot answer this question properly if I ask you in this way, what's the difference between test of control and substantive procedure? You can give various explanations, but the essential difference is test of control is to know whether control is working, right? It's a conclusion, working or not. But substantive procedure, I can write in one word, is to detect the misstatement. It's more detective, that's the answer. So substantive procedures again we can break into two. One is, you see in a company like a bank, you are auditing loans. Can you go through manually loan files? There are millions of loans. How to audit? So today technology enables us to analyze the entire data set and get into unusual loans. So that is where one part of auditing. Now technology, today we talk about technology, but historically in auditing we had this concept called substantive analytical procedure. Right, today with the digitalization we have so many tools. We can talk about AIs, how AI and RPA, things like that, big data, how it is going to help auditor. So what is SAP? Substantive analytical procedure. That's analyzing data and identifying risk. The other part is called test of details. Right, this is a detailed testing by the auditor. So audit is, for example, if you take external confirmation, is a part of test of details. So this is a basic explanation, and with that I can now get into the question. But have I explained to you adequately assertion? Did you understand that? So I'll spend another 2 minutes, right, through this slide. As well as, so before I get into slide, I want to give you this example and show all the assertion and how to remember assertion in the exam, because this even examiner, I am sure if examiner gives more question from this, the chances students will not answer is high, but obviously these are to be tested. So if you look at this example, I will use the same example. This electronic manufacturing company, you can think about any name in Sri Lanka, right? See, they are going to make a, they are sending a shipment to another company, right? This is not a retail business, so they have a shipment. This is going to another company, another country. Now my question to you, this is a sale. So I am talking in terms of assertion. When we talk about assertion, we are looking both transaction and balances, right? Transaction and account balances. So here AB means accounts balances. If I have sales, then balance is debtors, right? Now my question to you, how do we know sale has taken place? That assertion is called occurrence, right? Occurrence means the transaction has actually taken place and relevant to the company. So if I can check sales invoice, can I be 100% sure that sale has happened? No. Now you have to connect, there can be a misstatement, you cannot recognize revenue unless, now I am sure you would have learned accounting standard, right? Revenue recognition, new standard. We can't record the revenue until promise is delivered. We call it performance obligation, right? When you, for example, when you dispatch only you can record the sale. Now here invoice is raised, not dispatch. If you check both sales invoice and dispatch, now we know sale has occurred. So I tick off occurrence assertion. When sale occurred, the debtor is in existence. I know there is a debtor now, right? And then when there is a debtor, I can collect the money from debtor, right? And if somebody checks this sale transaction is recorded in the correct period, right? This has happened in 31st March, right? But so this has happened in April, then can you put it in March? No. So cutoff means it is recorded in the correct period. Now this checking this assertion is all about, you know, gathering audit evidence in relation to assertion. So relevant audit evidence. So now if you look at this slide, it will show you, and I recommend you to go and read it further. Now I can summarize assertion in one word, right, which is a meaningful word. See this word, pack cover, right. So what do you mean by that? I explained to you the definition of assertion, right. Now here these assertions, right, about there are assertion about presentation in the accounts, disclosure, right, accuracy, completeness, cutoff, classification, occurrence, valuation, existence, right and obligation and so on. Now what I explained to you earlier, when a sale transaction happened, so I said there is a debtor in existence, right, and then there is a right for collection, like that there are assertions. These assertions are applicable for transaction, occur. Completeness means how do we know all sales transactions, right, that took place have been recorded, right. All transactions that should be recorded have been recorded. That is the meaning of completeness, accuracy, cutoff, classification and so on. So these are the example. I think with the time limitation, we will see with that basic explanation whether we can handle the questions, and then if you need more explanation, we can probably come for those explanation. Now if I go back to the question paper, this question, now this is I said this is an important question, we stop there, right. The assertion, the auditor of Tharu PLC obtained a direct confirmation, right. Now this direct confirmation is a external confirmation we are sending to debtor, right. Now debtor, say for example balance is 100,000, we are writing a letter, auditor is getting company to write a letter, please confirm whether balance is 100,000. No, debtor will say yes, it is 100,000. So what does it mean to us? When debtor says it's 100,000, it means yes, debtor 100,000 is not a fake balance, there is actually a debtor who owe 100,000 and we can go and collect. So here right means for asset, right, obligation is applicable only for liability, in this case we are talking about a right, right. So existence. Now the question here is which of the following assertions are covered in the above procedure. Now I am sure this is a challenging question. If we give this question to if you take a sample, most students will get this question wrong. So out of these questions, what is the correct answer? A, B, C or D? If I tell you answer is A, why? First of all, I will tell you why other answers are not relevant. Completeness is not relevant because just by sending confirmation, I do not know, sending for few debtors, I do not know whether all sales are recorded or all debtor balances are recorded, right. And valuation, remember for debtors, valuation means whether I can recover the money. Although debtor send me a letter saying balance is okay, it does not give me any assurance, any evidence whether it is recoverable. Therefore, D is out, C is out, B is correct, but A is more appropriate because confirmation tell me two things, debtor is there and I can collect, answer is A. Then if I go to other questions, I think we answered all these questions, right. And yeah, this question number 27, the GEM company, right. Now what is the assertion, which of the following audit tests provide more reliable evidence regarding GEM valuation in the balance sheet? Our assertion is valuation. So see, GEM is not an easy subject, right. Now earlier I mentioned electronic item. Now how do we know GEM is properly valued? What is the most appropriate evidence? Is it to get a confirmation from management? No way. I mean, then it is not independent evidence, right. Physical count does not tell us anything about valuation, Market price, we do not know what it is, best is B, get expert opinion, right. That is question 27. Question 28, I just explained to you the different procedures in auditing. If I recall, I told you in auditing there are two procedures, risk assessment and further audit procedures. This question says, right, the procedures that helps auditor to understand, the key word is understand. So, if I ask you why auditor should understand the company, obviously answer is risk. To understand the risk, if you know the risk only, you can know, you can decide what to audit. So, therefore, our answer is risk assessment procedure. If you recall, in few minutes before I explained to you, risk assessment procedure is what? The process or the procedure followed to understand the entity and to see where the risks are. Then only you audit those risks. 29, I think those are some auditing question. 29 is a question from assurance, level of assurance in an audit. So, wherever answer, you know, we already know the answer is reasonable assurance, right. So, but here directly reasonable assurance answer is not there, but it says high level of assurance. Remember, another equivalent term for reasonable assurance is high level of assurance, but not absolute. So, answer is B. Then question number 30, I told you whenever audit evidence is there, there are two words. So, do not look at any other answer, right. Sufficient, appropriate, answer is C. So, we already covered that, right. Audit evidence should be sufficient, that is adequate quantity, and appropriate. Appropriate means relevant and reliable. Then 31, TR Associate is a firm of chartered accountant and requested to provide assurance report on information prepared by Tharu PLC. I mark here this is a PLC and they want a report on internal control. What is the level of assurance based on CA Sri Lanka technical standards, right. Now, I told you if it is an audit engagement, usually assurance is reasonable, high level of assurance, but this is something very specific question, right. If you want to give assurance on internal control, you can provide reasonable, but remember in Sri Lanka right now we provide only limited assurance. So, limited means you are not doing detailed work like an audit, but a limited work. So, you are doing an overall review of controls, internal controls here and give a limited assurance. So, remember limited means moderate, not high. So, that is the answer for 31. And then question number 32 we have already done. Question number 33 is part of auditing. You are in the process of planning the audit and this is first year of audit. So, we want to mark that statement, first year of audit, note that, and there because it is first year of audit, the experience that the audit team has is limited. Therefore, there is a higher chance auditor will miss something, that is called detection risk, right. So, what is the right statement if you are going to miss something? Are you going to do more control testing? May not be the right one. Support of independent expert, I mean if you do not know, no point of getting expert, first you have to know, right. Increase substantive test, okay. What is C? More time and resource need to be devoted to obtain an understanding of Tharu PLC because this is the start of the audit, right, at the start. Yeah, this is more appropriate, the reason this is the first year of audit, answer C. Then we discuss audit planning. Actually, I explained to you a few minutes before, auditing has two sections. One is to know where the risk is and then decide what to audit. So, that whole process of identifying the risk, assessing them and planning the procedure is called audit planning. If you do not plan, if you just walk into a client, give me your file and audit, that is audit without a plan. So, obviously, if you plan what are the benefits you are going to have, which of the following is not the purpose of audit planning? One is to ensure right team members are selected, yeah, it is objective to organize and manage the audit in efficient, effective manner, yes. To ensure that client obtain an added value service from the audit, to reduce the risk of giving inappropriate, I think all are correct, but see you can question, no, whether client get added benefit, of course you can argue that is also achieved, but probably it is odd point and probably the answer. Then question 35. Now, I already covered this. What is a test of control, right? Which is the right answer? First one, external auditor. Now, procedure used to detect, that is wrong. I explained to you control's purpose is not to detect. Procedure performed by the auditor to verify whether control, yes, control is there, design and operate in effect. Even without reading balance, we can mark B as the answer. That is your knowledge, right? So, that is the answer is B, right. Then 36 is on going concern, right. So, going concern is a different topic, but usually for your knowledge, in very simple language, like we have a lifetime, we do not know at what point, our life is very uncertain. Likewise, for a company, the auditing accounting standard requires, right. When you prepare annual report, tell at least whether you will survive for another 12 months. If company can survive for 12 months, at least then we say it is a going concern. Now, when these problems are there, companies making losses, they can't settle their liabilities, money. So, these are problems of going concern. Now, let us read these statements and see which two of the statements are going concern indicators. Indicators like symptoms, the issues. Current liabilities exceeded current asset. Yes, it is an indicator because you have more liabilities than assets. Then one customer, I highlight the word one customer here, right. From a larger customer, you have so many customers, one customer has problem. No, that is not a problem. One customer, no. But if you look at third one, banks have disagreed to, that is the problem. Bank is not giving us loan, and then tax department has issued a assessment asking more taxes. So, all points are relevant. But we can say mostly relevant points are what? 1 is more relevant and 3 is more relevant. Therefore, answer is 1 and 3. Then the next question is a definition of difference between reasonable and limited assurance, right. So, this is a kind of theoretical question, but practically you have to understand reasonable assurance is high level of assurance, limited is moderate, and then I can give a long explanation on this, but in the interest of time I do not, but let us see what is the inappropriate answer. Go by the elimination approach. This is why I say, imagine in the exam, for you to read this question, it will take about 2-3 minutes. So, that is why I said some question better you answer easy question in few seconds, and this type of question you have to read. To have that time, you should quickly do other questions. So, we can't answer this without reading also, right. So, let us go by the elimination approach. First one. Limited assurance is given when a material misstatement has identified in subject matter, but some assurance can still be given, whereas reasonable assurance is given when no, that is not correct, right. We can't say no material misstatement, there will always be some. In a limited assurance, practitioner will gather limited evidence, okay. In a reasonable assurance, practitioner will get sufficient appropriate evidence, right. Yeah, that looks like correct, but we have to see the most, which of the following explain the difference, right. What is the best explanation, we have to see, right. So, someone can argue that even B looks like, right. Then C, in a reasonable assurance, practitioner is fully liable if financial statements are found out. We can't say they are fully liable, that is a very debatable thing, and in a limited this in terms of liability you can't describe this. It is not a matter of liability. Remember, reasonable or limited depends on one thing, that is audit evidence. More evidence, reasonable assurance, less evidence, limited assurance. So, D, in a limited assurance, practitioner will conclude whether subject matter with respect to identified criteria is plausible. Plausible means kind of, reliable, are you happy, satisfied. In a reasonable one, practitioner will conclude whether subject matter means, say, let us say accounts confirm in all material respects. Now, this is a key word. Confirm in all material respects means material misstatement. Now, this seems to be the suitable answer, D. So, this is a fairly difficult question in terms of reading and then identifying the correct. Now, we are coming to probably the last section of audit reporting and the digitalization part. So, when it comes to audit reporting, again I do not expect here to cover this in much detail, because we have already spent quite a lot of time on this paper, but I will give you some explanation right now. Question 38 says, which of the following statement is true in respect of uncorrected misstatement. Now, in an audit, auditor find misstatement is not corrected. So, what? All uncorrected misstatements must be adjusted in order to form no, because if something is really immaterial, auditor is not going to bother, ignore that. Second one, accumulate misstatement other than those that are clearly trivial shall be communicated to management and requested to adjust the financial statement. Now, for me, I do not need to read C and D because answer is B. Why? Because this statement is taken from auditing standard, but for your knowledge what this point means, auditor should keep a record. Accumulate means you are like writing down these are the errors auditor found. There is one error 100,000, another error 500,000, but there is error of 1000 rupee. That 1000 rupee is called trivial, just forget 1000 rupee. Auditor set a threshold, I am only interested errors above 10,000. So, you have a sheet to record errors above 10,000 and give this sheet to management and ask them to correct. So, this is the right statement, but if you look at C and D, all uncorrected misstatements are not communicated, especially small one, we can't say all are communicated shareholder, no. So, that is the answer, right. So, answer is what? B. Then this question is from audit report. So, audit reporting is fairly easy area if you properly study again. Let me to clarify that, right. So, when it comes to audit reporting, if you read question 39, Hero PLC, now this is like a scenario, okay. The scenario, I think it's good that I have given you a similar explanation about inventory. Now, this type of question you have to see if you are doing a MCQ paper, best thing is to do very easy questions and even leave out some question that looks complex, because you can take some time and read them again and answer, right. So, this question, inventory is 400 million, in April and May all air conditioners held were sold for 320 million. So, after the balance sheet date, you are selling the inventory at a very low price. If the accounts have not yet finalized under subsequent event accounting standard, this is an adjusting event. Event that happens after the balance sheet date, which affect the condition at the balance sheet date. What is the condition? Inventory has to be valued at cost or NRV, whichever is lower. Now, you have reduced at a lower price, therefore, at the balance sheet inventory may be overstated by how much? Right. So, that is this gap that is about 80 million, right, 400 and 300. So, 80 million gap. So, if you look at their profit 300 million, now 80 million out of 300 million is what percentage? Roughly it can come to about your profit here, profit before tax is 300 million, it comes to about like more than 20%, right, 25 or something like that. Now, is this material? Now, you have learned in audit reporting, if something is material, it will affect the audit report, right. Now, then what is the audit opinion? Now, if something is 20%, I am sure you have learned how do we conclude something is material. So, we can calculate some threshold, right. As a guidance, I can tell you, if something is 5 to 10% of profit before tax, it is material, right. If something is 1%, it is not material. So, there are some guidance when you go through your study text, you will see. For example, if it is sales, 0.5 to 1% is material. Now, in this case, is more than 5%, it is material. When something is material, the audit opinion is what? So, obviously, audit opinion is going to be D, qualified, unless we see this as a pervasive matter. I am sure you did not understand. So, I think I have to explain to you this, all these questions are from that concept. Answer is D, but I will tell you why answer is D. Same way, if you look at question number 40, the type of opinion illustrated by the following phrase is what? I think this is a different question, right. If auditor says we do not express an opinion, that is called very easy. Do not give opinion means disclaimer. So, answer is D for question 40. Then if I go to 41 also, I will give you a rationale for 39 why answer is D. Question 41, which of the following reasons are the reason why an auditor need to modify the audit opinion? So, why auditor should modify the audit opinion, right. One is the material inconsistency between audited accounts and other information. I do not know whether you understand that. That is the different, I will cover that. Draw attention to a matter that is fundamental, that is called emphasis of matter. So, that is not a modification. So, that is out. Third one, conclude that financial statement as a whole are not free of material misstatement. Yes, If financial statements are not free of misstatement, it can be a modification. So, 3 is a correct answer. Fourth one, if auditor has not been able to obtain evidence, that is also reason for qualification. So, answer, correct answer is 3 and 4. D. I am only in this case without explaining theory, only explaining to you the answer, right. But I will give you at least 5 minutes explanation about these two questions, right. So, answer is D, 41. Then look at 42 also. Which of the following circumstances would lead to a qualified opinion, right. If it is a qualification, the matter represents substantial proportion. No. The matter is not confined to specific elements of the financial statement. No. Again, I am not explaining you, I am just reading only, right. That is why I say if you do not have the knowledge, you do not know what this means. See, matter is material, yes. So, if I say if matter is material, that is a qualification. For me, answer is C, but do you know why it is C, why it is not A and B? So, I will cover that. Then 43, right, we have another two questions, then that is over. Then we are going to last section, which is digitalization, right. So, 43, other matter paragraph. What is this matter, right? Other matter, is it relating to audit opinion? I do not know whether you know. Then what is 44? That 44 is a corporate governance question that we can very easily answer, no. You see, sometimes in MCQ is all about time. Now, when you look at a question, if you know the answer, tick it off, right. Now, this part we will answer 44 now. When auditing a company that is compliant with corporate governance code, if company has good governance, which two statements are correct? One is control environment is likely to be stronger. Now, I told you today one thing, control environment means what? Remember, I told the word tone at the top, directors are good, they see controls as important. In such a company, right, if they follow corporate governance, obviously one is a correct answer, control environment is a stronger. But level of inherent risk would be lower. Can we necessarily say that? Because inherent risk also depends on how complex your business. Bank inherent risk is higher than a normal, buying and selling company, right, because transactions are complex. Then 1 is a correct answer, right. Then 3, external auditor can raise issues with audit committee. Yeah, that is also correct, because when there is a corporate governance, external auditor can, if there is any question, go and directly meet the audit committee, right. Auditors are more likely to be reappointed, yeah, that is not a proper one. So, correct answer is what? 1, good governance means good control environment, and external auditor can raise any issue with audit committee, because otherwise if you raise issue with management, they will not listen to. Answer is 1 and 3. Now, do not think I skip audit report in question without explaining to you. So, I will spend another 5 minutes to quickly give you some of the solid explanation of all auditing standards relating to audit reporting. Maybe within like 5 to 10 minutes we finish that and answer this question, and our last section after that is digitalization. So, let us look at a few key points relating to audit reporting to look at these answers for these 3-4 questions. This is going to be very important, quick explanation, right. In your piece of paper, please make a note about audit opinion, right. In terms of auditing standard, this is auditing standard number, especially if audit report is modified, it is dealt in 705 auditing standard. But when you study, it is also important for you to note 701 standard, which is on key audit matters, and then 705 standard on emphasis of matter and other matters. So, these are like very important things that you have to go through. But in case of audit opinion, right, one of the key question to ask whether opinion is modified or not, right, modified or not, right. The first thing is unmodified. Let us say, okay, unmodified modified or not? Not means unmodified, right? If it is unmodified, we call it true and fair view opinion, right? If it is modified, we can't say it gives financial statements give true and fair, or else in other word free of MM. What is MM? Material misstatement. So, what I want you to know, the modified opinion is what? It is very important you understand these two. Modification can arise from these two reasons, right. One is a reason where financial statements as a whole, right, financial statement does not give true and fair view. Anything which will affect true and fair view, you can put under one category, right. In this case, having obtained evidence. So, auditor have been able to gather audit evidence. Therefore, I write this specifically having obtained, right. Financial statements as a whole does not give true and fair view. Then you have to ask two questions: is it material? Now, I explained to you in the exam for your purpose, right, what is material. For example, if it is profit before tax, say 5 to 10% in our example of inventory, question number 39. So, we got some percentage, you can calculate and see maybe about 20%, that is material. But I can't say it, although it is material, there is another criteria called pervasiveness. It is very important you understand this word, right, pervasive. Now, what is it? If you look up the dictionary for pervasive means widespread problem, right. Now, why we call corona is pandemic, everywhere is spreading, right. Now, in the accounts, pervasive problem means, now here in our question, in question number, I look at question number 39, problem is inventory only. Now, pervasive means in auditing standard there are three explanations, right. One is not confined. Now, here confined means limited, right, not limited, not confined to one balance. It is not one balance in the accounts. Stock is wrong, debtors are wrong, right, something else is wrong, many balances are wrong, that is the pervasive problem. Second one, confined. Now, we say it is not many, but it is only inventory, stock is wrong, but stock represent a significant proportion of financial statement, significant proportion. So, I write the word, please write it properly, significant proportion. So, if I say in the balance sheet 90% of my asset is single asset, which means my stock is 90% of the balance sheet. If stock is wrong, my problem is not only material but pervasive. Third one, because remember when auditor audits, it is not only account balances and disclosures, audit transaction, account balances, do not forget audit is auditing a disclosure. For example, if company is going to be closed down, you have to carry a very important disclosure. If there is a disclosure which is fundamental, right, that is missing, then that problem is also pervasive. So, why I explained to you this, if there is a problem which is material and pervasive, that opinion is called adverse opinion, right. If it is only material but not pervasive, that opinion is called qualified opinion. Another word is called except. So, answer to question number 39, only inventory is wrong, except for inventory other areas give true and fair view. So, that is the answer to question number 39. Then the second reason, now here I wrote having obtained financial statements do not give true and fair view, right. Then the other one is, now here having obtained, so here I am writing auditor has not been able to get the audit evidence, unable to obtain evidence. If auditor is unable to obtain evidence, we ask same two questions, is it material? So, stock we have not been able to gather, same question, stock we have not been able to audit, same answer is qualified opinion or except opinion, same as this. But if you have not been able to gather audit evidence, that problem is pervasive, means you know the meaning of pervasive now, many balances not audited, right, or one balance that is a significant proportion, then your problem is big. It is like you have not audited and therefore it is a disclaimer. So, now this you can answer quickly using this knowledge those question, right. Now, here I have explained to you 3 types of modification. One is qualified, the other one is adverse, the next one is disclaimer. Disclaimer means we do not express an opinion, adverse means there is a misstatement which is material and pervasive. Qualification can come from, you know, having obtained there is a problem and that is material but not pervasive, or you are unable to obtain evidence about a balance which is material, that is a qualification. These are the 3, there is no fourth answer, qualified, adverse, disclaimer, right, that is all. Then the last point, there is another question in the pilot paper that I will take another, although that is the area that requires a discussion, but in the interest of time to complete this discussion, I will explain to you that quickly, but I recommend you to go through that. So, the auditing standard number 705 deals with 2 matters. Let us put it in this way, I want you to write, there are matters where auditor can draw attention, right. So, this standard is 705. When you say draw attention, there are 2 matters, emphasis of matter and other matters, right. So, what is the main difference between the 2? The emphasis of matter only come when some matter is disclosed in the financial statement and is fundamental to users' understanding. Now, this is in theory, no, let us put it in practical word. Now, in a company set of accounts, there is a paragraph saying that there is a legal case, this company is having lot of troubles, and you know there is a paragraph like that in a big annual report in page number 50. Now, user may not read page number 50. In auditor's report, you will write a paragraph saying that we draw attention to page 50, there is a problem, that problem is disclosed and fundamental. Why fundamental? Company is going to fail, right, that is the emphasis of matter. So, other matter means any matter which is not disclosed, right, is not really disclosed like emphasis of matter, but relevant. So, we have to ask the question, relevant to what? Either relevant to audit, right, auditor's responsibility. So, auditor's responsibility, you know, that type of matter is called other matter. So, if auditor wants to highlight, you know, auditor has to cover in addition to audit laws and regulation or some additional information. So, those type of matters. So, the key thing for you as a learning point is not disclosed, and then it is not fundamental, it is not relevant. Sorry, it is relevant. So, I think with this we can answer all the questions in this paper regarding that audit reporting. So, we have already, I have explained to you why answer is D for question number 39, question 40 we answered, and then 41, why auditor need to express a modified audit opinion in this case, right, that you now know very well. Why answer is 4, because unable to obtain audit evidence, right, sorry, 3 and 4. I have clearly explained to you 3 and 4 is the answer, right. One is having audited, see, financial statements are not free of misstatement, other one is unable to obtain evidence, right. Under these 2 circumstances, modification, we do not know, answer can be what? When you say modification, it can be qualification or adverse opinion, right. So, the answer is 3 and here 3 and 4 D, and then in this case, which of the following is a qualification? Now, you can easily answer this question from my explanation. Now, this is not a qualification, if it is substantial proportion, it is out. B, the matter is not confined to specific element, also pervasive. We know here the paper set actually in this case they are extracting these 2 from the definition of pervasiveness, right. This one, see, the matter is material, yes, if matter is material, right, it is a qualification. Let us read D also. Now, in a question like this, I recommend you to read all. The matter relates to a disclosure which is fundamental, right, That is again now what in this case paper setter they have done, examiner has done A, B, D are pervasiveness explanation, C is the answer. Then 43 I just explained to you other matter. Other matter is to draw attention to a matter other than those presented and disclosed, and I said is relating to audit to auditor's responsibility. If you know that without reading anything you will mark answer as 2, but here there are 2 answers, then we have to read. The matter is deemed to be fundamental wrong. The fundamental matter is called emphasis of matter, one is out, second one is correct, right, relevant to understanding the audit, that is correct. Then 4 is totally wrong, because these matters are never a substitution for qualification. The answer is 2 and 3. So, 3 also makes sense, you know, this can use to clarify, this can be included in this, there is a section called report on other regulatory requirements. So, 1, 2 and 3 are correct. So, that is B is correct. Right. So, 44 we have already answered. Now, we have come to last 5 questions from a very important session on digitalization, right. Before I get into this, I think, okay, let us quickly navigate these questions, and then I want to give you some insight, because this is the world we are living today, 4th industrial revolution. We are talking about IoT. What is IoT? Internet of Things. There are many terms that are being used like buzzwords, the AI, CI, artificial intelligence, cognitive intelligence, blockchain, financial technology, fintech and so on, RPA, robotic process automation, big data, structured, unstructured, all that. So, that is the world we are living today. So, you must know this. While this is 5 question or small part of the syllabus, this is your future. So, if I quickly run through these 5 questions, there is one question about fintech. What is now fintech here means financial technology, right? What does it mean, right? And what is example for fintech? Blockchain. What is blockchain? And there is something on 4 V's, and there is something on AI. There are 5 questions. Cyber. So, let me to quickly take you through a small explanation of this. So, now we are getting to the last section of our discussion, because as you look at, if you look at the structure in which I completed today's session, is that wherever possible I connected it to many areas, examinable areas of the syllabus. So, therefore, these are our last part, and last 5 questions in your paper deals with this important subject called digitalization. As all of you know, we are living in a digitalized world, like I mentioned earlier. 4th industrial revolution is now. So, robotics, AI, these are not new things. There are many Sri Lankan organizations, they have already embarked on this task. If you look at, there are some companies, you know, earlier there were people used to enter data. Now, when you go and look at, there is a board, you know, saying that I am a robot, don't touch. Everything is automated. The computer is performing a task which is usually done by humans. Now, all these subjects are captured for you to give at this level the basic knowledge, the digitalization part. So, this one slide that I am taking you through, because end of the day when you are preparing for the exam, it is very important to go through the study text. Therefore, I am using certain explanation given in the study text. Like I suggested earlier, please make a note about this key concept, right. So, the concept 1, when I think this diagram that appears here, you see in the middle IoT, right. What is IoT? It refers to Internet of Things. If you Google, IoT refers to various devices which are connected to internet. Even without a human interaction, it passes data. Now, today, earlier we know, okay, computer is connected to internet. Now, it can be your watch, your car, or it can be a refrigerator. So, all these devices can be connected in some form. Because we are living in such a connective world, you know, one of the bigger risks that has come through now because of IoT is cyber security. So, which is one of the one of the syllabus topic. If you read the explanation, it is about protection of system and networks and data, right, because in the cyber space there are many devices, and say intruder, somebody wants to attack, for example, take live cases, you know, National Health Organization in UK was attacked and thousands of appointments were cancelled. So, all of this, even in Sri Lanka we hear many cases of cyber attacks. So, cyber security is one area in syllabus, and this term fintech, now we have seen the word tech is used in many places, but what is fintech? Now, fintech, if you look at this last part, financial technology is a term that is used that to describe the transformation. Now, what is transformation? The way that we used to do things, they have now been significantly changed, completely changed, that is called transformation. Now, earlier if you want to make a payment, you have to go to the bank, wait in the queue and so on. Now, any overseas payment to anything, now you want to buy a book today, right, which is not available anywhere. So, go to Amazon and order your book and you pay through PayPal. Now, all these things, the examples that I give, various tools which facilitate financial transactions, right, online supermarkets to all of that, they come under fintech, right. So, what is fintech? For the examination question purpose, is a term which is used with this new application of digital financial technology, that is the keyword, right. So, these if you look at example to, like I said, things like PayPal, online fund transfers to all and especially things like cryptocurrency, digital currency. So, these are the terms. So, today you do not need to pay in hard cash, even a cyber terrorist will say, I have attacked your system, pay in bitcoins, digital currency. So, all these are new application of this technology. So, that is called fintech, and that will affect the way we do. Another term that you want to, another concept that you should learn is data analytics. This has been there, but the whole idea is in auditing, I mentioned to you analytical review, right. Data analytics is about examination of data to identify patterns, trends, anything unusual. I will show you through example how data analytics works. Then there is a term called big data. I am sure all of you would have heard big data. So, when you say big data, if you know about this subject, what should come to your mind? What is the biggest data? You see, one of the richest company in the world, right, is Facebook. What is the business they do? It's all about content. You have account and people are talking how much of money they earn through advertisement. Now, that is one side of the story, and today there are some research papers that says if there are certain number of based on the likes you give, probably artificial intelligence can study, if you are a married person, study about the person than the spouse, and in other countries this has been used to influence the election results. Now, what comes to your mind when we say big data, exponential growth of data? I will show you a slide in a minute time, the number of records which are created in internet, right, through various mechanisms. It can be through Facebook, LinkedIn or Twitter and so on, right. So, big data is all about such exponential data, how we can make meaning out of this data. For example, when you navigate something in internet, now there is an advertisement that appears, right. Why don't you go to this hotel? Why don't you buy this? Because they are offering you something that you like. Why? They have used big data to analyze both structured and unstructured data and to make decisions. Then what is artificial intelligence, right? It is about now compute is going to do what you are capable of doing. That is where some people say that in future, if you are an accountant, unless you acquire this new skill, computer will slowly take this over, because the compute is going to mimic human intelligence. Another term that we are using RPE, I just mentioned to you, when you go to a some factory or the workplace where earlier there were people, now there are only computers. Now, the routine activities that earlier that were done by human, now you can through RPE, it's called robotic process automation, right. If you give all the steps, the computer will perform, the program will perform. So, RPA is described here is use of AI to handle repetitive. Now, keyword here is high volume repetitive tasks, right, which human will do with lot of time. So, through RPA. So, RPA is significantly being used in auditing as well. You know, certain procedure you have to download. Let us say you have to do a three-way matching, which I discussed today. So, we need to download, now auditor is doing a three-way matching to detect errors, right. So, you can program. So, download the PO file, the GRN file and the invoices and cross check and show me a report of discrepancy. This is RPA, right. And blockchain is another buzzword. You know, when you say blockchain, simply, you know, there are certain blocks. So, this is now, if you want to do transactions today, sometimes you have to go through various channels, information is passed in, sometimes manual signatures, one has to sign and so on. Now, through blockchain, it is going to digitalize this whole process of passing information and even making transaction through that. So, if you read this, collection of records, now we call block, right, that can be distributed, right. So, it can make a like a distributed ledger, right, and then the main point about blockchain is that nobody can alter these records. So, blockchain is a mechanism where you can records pass information from one source to another. So, it is used in certain application, we can probably see some examples. Right. Now, I have extracted some of the explanation when you read. I am sure for some students this may be a difficult chapter if you read blindly, you know, without knowing application, right. So, AI example and machine learning, right. Now, what is machine learning? Is a construction of algorithm. I want you to highlight this word algorithm. Whenever we talk about AI, so we talk about algorithm. It's nothing but series of steps where you have given instruction for machine to learn, right. You can train a machine, like let us say auditor knows how to audit. Now, if you train a machine, you do this way, right, you compare X and Y, if you get a difference like this, you check this. If you train the machine, machine will continue to do that. So, the algorithm is that the steps that you are giving for the machine to learn, and even the machine learning can be used to predict the future, right. So, there are a lot of application. Now, see, these are not, while it appears new, you see all these are AI application in today's mail. Now, in a email box, now some of our emails just going to spam mail, you know, there are so many training programs and unnecessary mails is automatically filtered. So, these are use of AI, right. And we know, for example, Siri, now say for example, in Apple phone, the Siri application, right. If you ask Siri, please read my messages, so Siri will read it, right. And then likewise Amazon Alexa, right. So, these are devices which are being used, the Pick Me, Uber, so all these are applications of and in terms of auditing, if you see for example, PwC, GLAI, you can Google now and see how they are using this program as AI, right, to change the way audit is done. So, I spoke about big data is exponential growth of data, right. See this word growth of data, and you can see these numbers, you will wonder what happened in 2018 within a minute, right. 3.7 million Google search, 187 millions, 18 million text messages. Now, when you have big data, all this information can be analyzed and to make meaning. Now, that is where this recommendation system comes. If you go to Facebook, LinkedIn, they recommend you, he can be your friend by looking at, you know, making various connections, right. So, that is about big data. You know, I am giving some of these examples so that for you the reading becomes easy. And then I explained to you some of the cyber attacks, right, how Uber was attacked and so on. See, other part that I want to explain to you, if you recall my early explanation of data analytics, that is where various softwares is being used to analyze unusual patterns in data. In auditing, most of these softwares are being used, especially ACL is a famous software, now they have changed their name. And some of you may not know Microsoft Power BI, the power behind Power BI, it is used extensively, right, to replace lot of the work done through Excel very easily, right. Through Power BI, it is not only data visualization, you can do various statistical analysis. R is a very powerful software. So, this is your future, right. Today, if somebody has learned Python, R, this software, there is much demand in the business world, right, because if you look at some of the business leaders in Sri Lanka, right, there are data scientists. Now, you can Google and see salary of a data scientist, right. There are some data scientists, they directly report into managing directors, because this is telling the managing director or board what is the direction of business, what is going to happen. We use the word insights. Insight is not something visible now, but looking at the future. So, these are some of the application, right. Forespin is a Sri Lankan product. But rather than talking only theory, I will show you some example of how this is being practically used. So, statistics is one of the very important subject which is used with AI, because when we talked about this word algorithm, right, algorithm can't just work, it has to work with statistical techniques, right. Now, I am showing to you, this is analysis of one company's transaction. There are so many transactions, right. Now, Z score, I think all of you know, maybe A level results, we talk about Z score. But this is Z score is in statistics is about normal distribution. Many data distribution, if I draw a bell curve, you can draw a bell curve and see many data distribution follow a normal pattern, right. Even in exam, if you look at marks of majority, right, if you look at, there are very few people who got above 70, right, and very few people who got below 20, and majority will be in the middle. So, that is like a bell curve, right. So, using Z score, right, we can do some wonderful analysis, right. Now, here this is a salary analysis of a company salary entries, right. The standard entry usually is 100 and the standard salary entry value for each month is about this in a company, right, vary, but suddenly you see a transaction of 400 million, you can quickly figure out using Z score analysis, right. And then when it comes to fraud, this is, you can Google and learn more about Benford tool, right. Benford is a theory and a model that says if you have transaction, usually if you look at a Benford diagram, right, usually most transaction in a company start with 1, say 150, right, 230, 300, 400, but what they say Benford law, number of transactions start with 9 is less compared to other transactions, say 999 is odd transaction. Now, in a company, I will give you an example. Now, there is one company, they say purchase order beyond 100,000 should go to managing director to approve. Now, this managing director is a tough person. Now, knowing him, procurement people, what they do is they raise a purchase order at 9, just 1 rupee below, right, 99,999. So, then it will not go to managing director. Now, if you are using data analytics techniques, you can quickly identify, right, even through Benford these transactions, because starting with 9. So, likewise, there are a lot of development. Now, when it comes to big data, there is another concept I want you to learn, 4 V's, right. This is a very important thing. Again, these things some of you will just disregard, but these are very easy things, right. When it comes to big data, what are 4 V's? One, I already discussed with you the large volume of data, right, generated through big data, huge volume. And this data vary, variety of data, right. So, when we say vary, because some data, these two words are very important, right. Some are called structured. Now, your purchase database is a structured database, but Facebook details, so WhatsApp messages, these are unstructured data, right. So, when we deal with big data, we have to look at its large volume, various variety of data, and velocity is how fast this data, come in. Speed at which real time data is being streamed into the organization and how quickly they are to be processed, how many transactions that take place, the speed at which it takes place. And then veracity is about, reliability of this data, truthfulness, because some data, although data is there, you can't really trust, right. So, I think that I gave you some introduction, some basic knowledge for you to read that chapter, and I am sure with this knowledge you can easily answer those questions. So, I go back to my main slide where I explained, I asked you to write down this concept, fintech, cyber security, AI, data analytics, RPA, blockchain, and now we will see those 5 questions. I am sure those should be easy for us to answer. Right. How do you want to start with question number 50 or we will go from question 45, FinTech. So, what is the correct answer? FinTech. If you remember my explanation about FinTech, right? Is it about technology that is going to challenge the role of chartered accountant? No, this FinTech is a general term. It mainly relates to the use of digital currency. Digital currency is maybe one application of FinTech. It represents the new application of digital. This is the answer. C is the answer. You see, if you know the subject varies, what are the example of FinTech? I already explained to you PayPal, right, which is not an example for FinTech. Mobile banking, PayPal and cryptocurrency like Bitcoin, right, cloud computing, API. So, all these are FinTech. So, odd answer is risk management. Sorry, it is not risk management, resource ERP system. So, that is wrong. D is wrong. So, D is the answer in this case, it is not a FinTech. The blockchain I explained to you, right. So, what is correct? From a limited explanation, because I did not do a detail, I am also not expert of this subject, but as chartered accountants we should embrace some of these we actually use. So, blockchain is a new thing for many, right. If you look at what is the right, because what I explained to you, blockchain is all about connecting through pieces of blocks and passing information reliably and using that for transaction processing, and nobody can edit. Through that explanation, can we answer this? It can totally eliminate intermediaries. So, now these words are extreme word, you can't totally eliminate banking system, no, so that is out, right. Data, which of the following is not a benefit? Now, then answer is A, right. Let us look at other data can be transferred anonymously, yes. It offers transparency when dealing with currency because blocks are viewable, yes. Simplify the process and as a part of single public ledger rather than multiple ledgers. See, one block everybody can be a user rather than having years. Answer is A. Then this 4V we just discussed, right. So, you can easily answer what is 4V, what is the correct answer? A, volume, velocity, variety, volume, velocity, visibility, volume, velocity and veracity, right. Value, volume. So, what is the correct answer? Volume, velocity, variety, right. Now, here actually is 3 V's, right. So, yeah, so I think you can answer technically A as well as volume, velocity and veracity, right. But when it is 3 V's, you have to use what is given in this pilot paper as the answer, probably that is what is in the study pack, but I think in that case they should have used 4 V's. So, I think better you take a look at it, but when looking at this answer, then both of these are captured in those meanings, right, B as well as, because what is out here is volume, velocity, variety. Now, this visibility is not a part of this, right. And here also it is volume, velocity and veracity, and value is not captured, those are out, others are covered. Then AI, right. So, what is the best one explanation for AI? Human use computer system to complete, where human use computer system to complete increasingly complex tasks. Computer system complete tasks humans normally would not be able to do. When computer perform tasks that would usually require human intelligence, you remember that we discussed, right, human intelligence, computer is going to do. So, C is a better answer, right. When computers are used to analyze, that is analytics. So, C is the answer, right. Then last one, cyber security. Now, there are a lot of cyber terrorism activities happening even in Sri Lanka, right. What is the proper response? Having a cyber security officer is good, it is there in Sri Lanka corporate governance code as well, and then implement risk management and employing a chief risk officer, right, seems to be odd, B, and then learning from past security breaches, again that is important, and then if you look at the last one, enhance cyber security features, yeah, all odd answer is B. So, answer is B. So, I think with that we have covered this paper. And if you look at during probably I think it is about more than 3 hours, and I am sure I have been able to help you to understand some of the examinable point. Before I conclude, I want to give you a few advice taking about 3 minutes how to be successful in the exam. So, that is my last slide. So, I think with more than 3 hours of talking to you, so now we have come to the end. I am sure this session would have been very useful in a crisis time that we are facing today for you to be successful and to fast track your journey of becoming a chartered accountant. Finally, I am going to leave with you very valuable thought more than anything else that I discuss in the entire journey of becoming a chartered accountant, not simply for this paper, how to be successful in the exam. So, some strategy. Number 1, what is very important when you study? Power of mind. While we talk about artificial intelligence, people are talking that computer is going to surpass the human brain. I will probably challenge that. It is the human who created all of this. So, therefore, when you study, it is very important to ensure tranquility. Your mind is pure. So, make sure that there are no, always our mind is clouded with personal problems, family problems and so on. But when you study even 1 hour, make sure that your mind is purified. That is one advice. And then the second point is less more strategy. What is less more? If you are a smart student, rather than trying to read 1000 pages, right? If you use today's video strategically with very limited work, you will pass this exam. I am telling you confidently, right? And also this will tell you some homeworks to go and do, and this would have explained to you certain topics that you have to specifically go through. Less more means you work, you are smart, few hours more results. If I sit for 1 hour study, I know I am going to earn today say 30 marks in my paper. So, that level, because time is the most valuable thing in life. And the third point is very important to test yourself. How? All the explanation I did on the board here, you can see these letters now you can't read, but I did it very fast, right. Now, test yourself means you ask the question, right. So, what is corporate governance, what is audit committee? Take a blank piece of paper, talk with your mind and ask questions to know whether you know. Then the fourth point is when you study, it is very important to figure out the best time for you. There are a lot of students, they do not know what is the time to study. Some students start after a heavy dinner and they are very tired, you get a very big book, start reading and then sleeping on the book, right. No, you have to find, if you feel sleepy, sleep, and of course you should know how to get up and to start. But the best time for you, for example, if you get up at 4 o'clock in the morning, the best time. For some it may not work, but do a study and figure out what is the best time for you to study. And then today, if you remember how I started this, see how examiners, you get into examiner's shoe, how examiner is going to set the paper. On the examiner's table, you will see one document, one syllabus and the study pack. So, use the same tools. You have to read the syllabus and see. Now, of course, I talked about corporate governance 10%, right. There again you should know these topics, definition of corporate governance, very quickly I can study, right, without spending time. But if you take auditing 45%, so those examinable topics you have to give more attention, right. And then this is another technique, very lengthy boring notes, you will very quickly read it, one page in like 2 minutes. How do you do that? Right, those are very important techniques. Now, when you look at, now when I say that say corporate governance, you are reading a very long note, but you only look in this definition and some parts of it, and as long as you understand, you do not bother to understand each and every word. And then finally, this mind mapping is very important. Now, today in my explanation, if you remember how I explained to you say the auditing process, see this triangle of auditing, on the top audit opinion, and then ethics and gather evidence, sufficient evidence. Evidence is all about auditing has two things, risk and response. This mind mapping really helps you to remember complex concept. And finally, there is also, if you quickly look at, you have limited time, your exam is tomorrow, you do a very quick you know, read in by headings. So, these are very powerful techniques that you can use for your studies. I think with that I am going to close my session, because you see today's session is done with difficulty. Even my curfew pass is going to expire in a little while. So, finally the last thing that I want to say, in very few now with this session which is going to be available, I am sure today it will be available most probably. So, I recommend you, by taking this as a guide, go through quickly examinable areas and be ready for the mock examination. So, I am sure already institute will very soon announce you that, and then I am going to probably later do a session to discuss answers. So, thank you very much.